Yeah, we want to have we just thought with the elections and whatnot, we would have a guest on our program, Victoria Bogner. And Victoria is our
Director of Client Experience.
Director of Client Experience. And she's also a chartered financial analyst.
She's much more than our Director of Client. She interacts with the advisors and the clients in order to make the interface as enjoyable and as efficient as possible.
Yeah, and frankly, and before we have her on, she joined us through a merger with one of her firms where she was the CEO and their chief investment officer. And
a practicing advisor.
Kind of first assignment as Allworth is connecting, making sure we get awesome client service, awesome advisor experience, and the whole kind of connectivity between them. That's kind of her focus. And because she's highly analytical, smart, good communicator, she's been perfect for the job at that. And so... Victoria, thank you for taking some time to join us.
Yeah, it's great to be back.
And we're going to talk, we're on because...
Well, this is I said before we dug into this, Scott, I said we're going to talk a little bit about what's going on in the Trump, what to
we're
expect.
Starting to, yes.
And I said, this is just, look, I go and read the reviews from our show where people rate them. Have you ever, you don't read the reviews? If we mention Democrat or Republican, the all kinds of negative stuff comes out in these reviews. Like, oh, I can see through you. We know whose side you're on. This kind of garbage. Go ahead, write the review. I shouldn't say I don't care because I do care.
Also, I know with Allworth, as we've led the company over the years, it was always we're apolitical. Money's not red, money's not blue, money's green.
That's right.
And that's what our political focus has been. Anytime we're dealing with clients, it's not.
But
and the reality is, like we've got clients. We all have our own values.
That's right.
And I have clients that their values don't quite line up with mine, and that's fine.
Children.
But I also highly value serving them very well, and I have a fiduciary obligation to do what's in their best interest.
That's right.
Their best interest.
But look, tax law drives a lot of investment decisions. And most certainly financial planning. Because you have to view financial planning through a prism of tax.
Of course.
You have to. You don't have any choice. So
that's why we talked about HSAs at the beginning.
That's right.
I would not use it if it wasn't for the tax benefits.
That's right. Right? Yeah. The investment is the investment. It's the vehicle.
Yeah, and I have the same investment I could own anywhere.
That's right. So we asked Victoria to come on today to talk a little bit about what we can kind of anticipate from this new administration.
I can tell you exactly what the next 4 years are going to look like.
Perfect.
Just kidding. Okay, well, first of all, I think before this election was finalized, a lot of questions were around the Tax Cuts and Jobs Act of 2017, commonly known as the Trump tax cuts, because they were pretty significant, and a lot of those are set to expire at the end of 2025. But now that Trump is back in office, the GOP controls or will likely control both legislative branches. It's very possible that we'll see efforts to either extend those cuts or even make them permanent. But of course, Washington permanent doesn't mean forever. It just means until the next administration takes charge of it. But even if these tax cuts are extended, as you say, there's so little we can control, right? We can't control inflation. We can't control the stock market, but we can control, to a certain extent, the taxes we pay. It is a lever that we can pull. And this is something that you should start thinking about in your 40s and 50s. Don't wait till you're 65 and say, I want to retire. Now, how do I manipulate my assets so I'm not paying so much in tax? You're setting yourself up for much greater success later if you're thinking about this in your 40s and 50s with a good financial planner, so that you can adjust as laws and situations change. But especially if you're a high-income earner, tax planning should be your top priority.
Right. You should have a diversified tax strategy very similar to a diversified portherfolio, right?
Exactly.
Which means some of the money is in pre-tax, some is in post-tax, some of it's in Roth, some of it is a depreciable asset maybe. So what do we expect? Do we think that they'll be, they will continue with this? Do you think there's going to be more tax cuts?
There could potentially be even more tax cuts, tax advantages, but Also, the flip side of this is tariffs, trade disputes, right? Because we have the taxes that if they get extended, in large part, that will be good economically. That increases consumer spending. It will increase GDP. But on the flip side of that, if we have tariffs, trade disputes, then that is going to put a dampener on GDP. That's going to raise prices. It's going to raise inflation. So there are two sides to the coin here of how you manage your assets and your tax liability. It's not just about what is happening in the tax picture situation, but it's also what's happening in other policies and legislation, which we have an amazing investment committee that pays attention to all of that. But you need to look at the whole picture.
Yeah, and even with these trade, I've always been a free market guy from as when I was in high school. You know, with my paper route, essentially, I was free market. I believe that we need some sort of rules, that we agree to abide by the rules, and then let's let the market decide.
Well, kinda. I'm kind of that way, but I don't think that strategic assets in the U.S. should be owned by foreign corporations.
Okay, so that's an easy one. Yeah.
Okay.
Strategic assets, but even the whole trade imbalance, the trade deficits, and the tariffs. I'm curious about your perspective, because there's different perspectives here, and some say this is just going to cause inflation. It's going to raise prices for everybody. It's going to slow the economy down. What's your take?
Well, here's my opinion, and I have read many different economists' takes on this, but at the end of the day, tariffs can be used as a tool to be able to negotiate trade agreements. It's similar to what happened in 2018, 2019. What's so interesting about this is back then, this was what everybody was talking about. And I bet if I asked you what happened with trade tariffs in 2018, very few people could tell me, but
I don't remember.
All anybody cared about. But what Trump did is he threatened tariffs of about 25% on billions of dollars worth of Chinese goods. And many of those tariffs did go through. And then if you remember, China retaliated by putting tariffs on our agriculture and our soybeans. And then we had to subsidize farmers because they were impacted. And overall, it was a drag on GDP. It was negative. It did lead to phase one of our trade agreement with China, which, by the way, just objectively speaking, COVID happened. And so that trade agreement pretty much went to the wayside because everybody was just dealing with their own COVID mess. But long story short, tariffs usually are not a good idea. You want as much free trade as possible because tariffs, there's a misconception. It is actually the buyer of the goods who's paying the tariff, right? So if we're charging 60% tariffs on Chinese imports, China isn't paying that. The buyer,
the consumer,
the American company, is paying that.
Yeah, or it's
that on to the consumer, right?
Or it's pushing the price up of a particular product, whether it comes from China or not.
Yes, exactly. So the issue is then that does increase prices. It decreases competition. That passes on to the consumer. It increases inflation, and then that increases interest rates because the Fed needs to get that under control. And so it's usually a negative spiral. You want as much free trade as possible.
But I don't think he's going to – I think it's going to be the same story as last time. He's going to threaten, and then come to the table and negotiate.
Yeah. So
there's no way we can have 100% tariffs or 60% tariffs on anything. That's a no-go. That would.
Are you saying Trump might have exaggerated a statement about something?
You know, it's
so let's talk about.
I know he's not known for that, but
yeah, right. Let's talk about interest rates for a bit, because the bond market, particularly the day following the election, the stock market was skyrocket high, and bond market had a pretty significant sell-off on the longer term bonds. So what's transpired with interest rates, and what can we expect maybe over the next several months?
That was interesting because right after Trump won the election, interest rates dropped. So as interest rates go down, that means bond prices go up. They're inversely related. But that's starting to level out now because investors are processing what these potential policy changes could mean, the biggest concern being inflation. So if Trump extends the 2017 tax cuts, That's good. It'll increase spending. It'll boost GDP in the short term. Of course, that will rack up more of our debt. But if this is met with higher tariffs, companies could see higher production costs. They're going to pass that on to consumers. It's going to lead to more inflation. And something that investors need to realize is that as of now, the Federal Reserve is an independent part of this equation. So Trump doesn't control interest rates. It's the Federal Reserve that does. And one of their mandates is to keep inflation under control. So if inflation starts to get out of control, one of the levers that the Fed will likely pull is to start to increase rates again. So it's important for investors to then keep those factors in mind, because shorter duration bonds could help with that interest rate risk. But bonds still play an important role in keeping things stable. So important that if you have a financial planner, and I hope you do, that this is something that they're keeping a pulse on and paying attention to in your portfolio.
And so basically not reach for the long bond, stay a little bit shorter on the bond, and you're not giving up much yield, if any at all.
Right now, the yield curve is pretty flat. I
Yes.
mean, when you go far out on the long end, you're not making enough of a heightened return to lock your money up into that in those longer durations. So yeah,
And
it
the
makes
interest
sense
rate
to
risk.
stick with more intermediate and short term for now.
Yep.
And with respect to Social Security and Medicare, now you're not clairvoyant, but we all know that eventually, and it's getting closer to the point where Congress is going to have to do something, right? Are you expecting anything to come of the Trump White House in this area?
Well, Trump has said he wants to protect these programs, but as you say, with increasing budget pressures, we might start to see some talk about raising eligibility ages or adjusting benefits. They might raise the retirement age. They might tweak the cost of living adjustments. That's the kind of change that we would see.
Yeah.
And we've seen it in parts of
retirees-
Vicki. We've seen it in parts of Europe, have we not?
That's right. And those are easy levers to pull, but any major reform is going to take time. So the best thing to do is to plan based on what we know, but be ready to adapt if things do change. And for younger workers, personally, when I run plans for clients under 50, I just assume a 25% reduction in Social Security benefits just to see how their plan holds up, because I think that is a realistic worst-case scenario. When we look at Social Security, if it was cut by 25%, it would actually be fully funded as of right now. So I think that's a realistic.
That's what
worst-case
statutory
scenario.
will occur in 10 years if nothing is done.
That's right.
Once
Once
we get bust.
Medicare is a whole nother story. I mean, that is so. That is going to be the bigger issue and the bigger problem, because it is much more underfunded than Social Security.
Well,
It's
our
a
health-
big problem.
Well, and it'll be interesting to see with RFK Jr. and with what he actually does in that area. But when we've got roughly 20% of our economy is in healthcare, right? It's
That's right.
It's a big
massive.
number.
It is a massive piece of our.
It's a big number. It's a big number.
Well, thanks for taking a little time to join us, Vicki.
Absolutely. Thank you.
As always,
All right.
thanks for being part of the team, and your wisdom is always appreciated.
Yeah, we like Vicki.
Yes, she's smart.
Victoria, Vicki, both.
Yes, super smart.